Hi there, welcome to Market Call. Our guest today, Kim Bolton of Black Swan Dexteritas, and the topic is technology stocks. The number to call 1-855-326-6266 or email us marketcall@bnn.ca. Kim, thank you very much indeed for coming on the show. Before we get into your views on tech post-pandemic, broadly, you say there is a risk that the market gets back to the broad market gets back to those March lows.
Yeah, thanks for having me again, Andy. Yeah, we wouldn't be surprised if we take another look at the March 23rd lows. I don't know if you go through them, but if you look at other crises in the past, you usually have this volatility bounce, and then you go back and take a look at it.
What about tech post-pandemic? I mean, it seems a given that companies that offer a play on working from home are going to see more business.
Yeah, and I think it's going to be with us for a while. So the whole work from home is playing out extremely well for a lot of the e-commerce for service, the software as a service. So yeah, they're going to be here for quite a while. I would also I'd say not just the work from home, but the whole cloud hardware side is doing extremely well. The data centers are doing well. The digital entertainment and social networks, even of course the telecommunicating companies, and then the e-commerce, the digitally based financial product e-commerce companies.
One thing that has surprised me, I got to admit, I've heard very little about the internet getting overloaded by extra traffic. I know Netflix at one stage degraded the picture quality a bit, but it looks like the internet, the digital infrastructure has stood up really well.
Yeah, and the hydro companies have done a very, very good job in managing the electricity side, but you think about it, the big office buildings are shuttered, and some of those big offices are closed, and so it's just being picked up from home. I know going downtown, you can actually get down to downtown Toronto, but then they only let one person in an elevator, which very much deters some of the people from actually going back to work.
Hadn't thought of that. Wow. Do you think these office blocks are going to be white elephants? Will we be walking around in 2 decades saying, what were we thinking of building these things?
Well, the whole real estate industry is going to be turned on its head, I think. But it's too early. It's too early. We're only in the very, very early stages and experimental and trying to get back to work. But real estate industry and certainly the commercial side is going to be disrupted. Yeah.
Kim Bolton is our guest today. He's with Black Swan Dexteritas, and Kim is a deep thinker on technology stocks. So that's the topic. We don't want to hear about junior oils today, I'm afraid. At 1-855-326-6266 or email us right now, marketcall@bnn.ca. We have an email from William. William wants to know about D-Box Technologies. Of course, they make those fancy seats for cinemas. They vibrate and stuff like that. He says, with so many cinemas closed, what are the prospects here?
Hi, Andy. Sorry, there was a pause there. That's you're talking about D-Box Technologies?
That's right, yep.
Oh, okay. Yeah, it's an interesting play, but really this COVID-19 and beyond has really sort of put that investment thesis just on hold. I don't think it kills it at all, but it just there are other opportunities out there. D-Box has done a fabulous job. Been to the theaters. Their technology is a wonder, but it's just sort of on hold right now.
Right. So it wouldn't interest you right now. You wouldn't see much momentum, Kim, at the moment.
No, it's not just about theaters. They also get involved in simulation and training around the world. But I think we just need a bit more visibility of when the theater industry is actually going to open back up. And you can see it in the stock price, it's trading around 3 cents. We're watching it though.
Howard sent us an email, wants to know about AT&T, specifically the impact of 5G expenditures on their debt load. So AT&T, 5G and debt.
Yep, thanks, Howard. AT&T, AT&T has never been any more than really sort of a dividend investment. And it's a very decent dividend. It's got a 6.9% dividend. Mind you, it is down 20% plus on the stock price this year. I think, certainly if you look back a couple of months ago, the runway was pretty long for AT&T when they started to do their 5G deployment, but that has really sort of been placed on a backseat, and where they're focusing on growth is actually into the streaming. The debt ratio is still very high, 60%. But they should be able to cover the dividends from cash flow and through cost savings and the rollout of the streaming products. So we follow it, currently trading around $30. Our price target up at 48, which is quite a ways away, is really contingent a lot on that streaming and also the 5G deployment. But that 5G is really sort of taking a backseat.
Okay, and the yield, I don't think I have the yield right now. I'll get that for you later. Gus in Toronto, go ahead, please.
Good afternoon to you both.
So go ahead, Gus.
Hello, and good afternoon to you both. First of all, Kim, I just want to say thank you for that recommendation on Tableau last year. Really paid off after Salesforce acquired it. And so my question is regarding Datadog. Can you please give me your outlook on Datadog? And Splunk is one of its major competitors. Thank you.
Thank you. Datadog.
Thanks, Gus. And that Tableau was a great story and has done extremely well in helping out Salesforce on the bottom line. So here we are, Datadog. Currently trading around $47. We have a price target of $48.60. So we've actually taken about half of the position off, and we'll look to reinstate down in sort of the 30s with a 30 handle on it. Just for those that are wondering about Datadog, Datadog is really all about infrastructure monitoring. It allows monitoring and fixing issues and automation. It really helps a lot of companies, especially when they're migrating over into the cloud. Gives them shorter time frames for troubleshooting, and improves their time to market. So we expect, we still think you're going to have a bit of a correction here, and I think you will be able to buy it a little bit cheaper. It's a fantastic company. There aren't that many around that, Datadog has 85% year-over-year revenue growth. People salivate when companies have 30, 35, but really the only other company out there that has these fantastic revenue growth projections is Alteryx, which is another perennial investor favorite. And the other attraction to Datadog is its cash flow positive, and it consistently increases its operating margins. So you go through the checkbox, what you're looking for, and you can pretty well check them off. But that's why it's priced so sweetly up here at $47. I hope that helps.
Sorry, I know you touched on this, Kim. What do they do at Datadog?
Oh, okay. So they IPO'd, about a year ago, if less than that. And so they they develop monitoring and analytic solutions for companies. And it's a software as a service platform. And it just allows automated infrastructure monitoring. And once you can do that monitoring, you can be fast to actually fix any issues that are going on within the infrastructure, within the cloud that they're operating in.
Let's take a break. Kim Bolton is taking your questions on tech stocks, 1-855-326-6266. Peter in Vancouver, fire ahead, please.
Thank you for taking my call. Great
Pleasure.
to see you again, Mr. Kim Bolton, the great technology manager. I want to congratulate you on your tip on Shopify on March the 31st. It was your top pick, and now it's almost double. Today, I like your expert opinion on OpenText. Please say hello to your son. Thank you very much, Kim the Great.
Thanks. OpenText.
Thanks, Peter. Good to hear your voice again. Yeah, that Shopify, holy smokes. And then they reported today it went over $700. We got out of that at $579. But let's talk about OpenText. So OpenText is involved in the enterprise information software. And I'm just getting my notes on this one. And they really are a darling out there when it comes to this field of enterprise information management. There you go. And not only do they catch the eye of the investor, but certainly the users of their software. Because, for example, Gartner Research, who is the largest research company for enterprise around the world, actually have them in their top right-hand corner quadrant for content services platform. They've maintained a double-digit recurring growth rate. They picked up some very interesting companies recently. They bought Carbonite for $1.5 billion to expand the cloud revenues. And then just yesterday, actually, they bought a smaller one out of Montreal, Xmedius, who provides a range of secure information transfer and communication services. A great cross-selling opportunity. So right now, trading around $39. We don't own it right here. We did own it. We do have a price target, 12-month price target of 43, but we're looking to buy it down in the low 30s. Thanks, Peter.
Okay, so not. Okay. Sorry to cut you off there. We have an email from Bruce in Toronto. He'd like broadly a couple of ideas for the Canadian tech sector. Any stocks that you're looking to buy on a pullback? Any that look cheap right now in the Canadian tech arena?
Absolutely. Well, OpenText is one. Certainly, Shopify would fall into that category. And Constellation. You know, Constellation Software is an interesting story because I'm sure they're very, very busy at looking at, because the whole investment thesis of Constellation Software is about buying technology companies to fit into their portfolio. And I think there are going to be some opportunities for them going forward. I guess the last one that I'd recommend is that your viewers take a look at the BSD Global Tech Hedge Fund, because there you have a bunch of Canadian, but you also have international, all the way from semiconductor to hardware to software, but then you also get the hedge overlay on top of it to protect from any downward shift in the market.
No problem. That's your own hedge fund. What's the minimum investment in your fund, Kim?
Minimum investment is 50,000. However, we do have flexibility to go lower. I guess the lowest we've gone is down to $20,000. And you know, the reason we actually sometimes lower is that we often find when people get us on the radar, they will add to it because they have good returns and good risk management on top of that. You know, year to date, we're up 11%. Which is far ahead of the market. Now, that is due to the stock picking, which is really the cornerstone of what we do. But with this volatility in the marketplace, the ability to actually hedge the whole portfolio through equity indice derivatives has been extremely helpful in protecting on the downside. Certainly lowering the volatility, but when you have such severe swings, that hedging can actually produce some profits, produce some alpha, which normally it wouldn't. It's normally the hedge is there for an insurance policy, but in these volatile times, we are able to produce some alpha out of that hedge.
John in Montreal, go ahead, please.
Good afternoon, gentlemen. My question's on art media. Ontario Centre of Excellence had art media's technology in their opening ceremony. They had a robot actually called Sophie in the conference room, and she was speaking to Dr. David Hansen, who was casting live from Silicon Valley via hologram. So imagine that, a conversation hologram talking to artificial intelligence. Do you think with this pandemic there's a use for this? And could you give me any further information? Do you like this stock? Would you own it? Thank you.
Thank you. Art technology.
Thanks, John. It's an interesting stock. We don't own it. We follow it very, very closely. And I can't recall, maybe Andy, if you could tell me, it's probably trading right around, I don't know, 9, 10, 11, 12 cents. Is that about right?
Let me see if I can find it. Go ahead. Yep.
And
what do they do again, Kim, if you just remind us?
Oh, okay. So what they do is that they actually can produce holograms of objects or people or groups of people, and actually beam them. It sort of sounds like Star Trek, but it can beam it to other places around the world, but not just individuals. I've been out to see them. I've met with them. They can actually beam whole boardrooms to other places, which it makes so much sense. One of the issues is that, as you can imagine, it's a bit expensive, but they have been rolling it down in price. They do have cheaper versions coming up. And then when it becomes more commercially available, some of the big financial institutions use this. But for, to really sort of spread it out commercially, it's a bit cost prohibitive right now.
Right. As you say, the stock is around 9.5 cents. They call them humograms. Yeah. And ARHT stands for Augmented Reality Holographic Technology.
Yeah, it's phenomenal. It's phenomenal. Andy, if you ever get a chance, they have their head office, their showroom up near Yorkdale, and it's definitely worth the visit.
Sounds a little scary, but also fun. We're going to take a break. Kim Bolton is our guest today. Your questions on Tech Stocks, 1-855-326-6266. Kim was on our show April 17th of last year. Google/Alphabet was his first idea. Total return of 9%.
Thanks, Andy. Google is has always been in sort of our top picks, and and even during these uncertain times, the first quarter metric perspective is, Google is still performing exceedingly well. So right now, trading at 1360. We have a price target, 12-month price target of 1,555. So just going back, they reported, I guess 2 weeks ago now. Search activity, of course, is spiked. YouTube is up significant. The Android app downloads are up 60%. They've had massive increase in demand in Chromebooks. The Google Cloud killed it. They had 52% growth. The ad side is sort of the weak side of it. But, on the plus side, when Google ads get turned back on, it's just going to be another money machine. So here it is, 1360. We own it. We'd look to add to it down at 1,200 and also at 1,100.
Okay. So, sorry, Kim, I lost track there. So you are still a holder of Google?
Absolutely. It's in the top five.
Sorry about that. Oh, yeah, I beg your pardon. Amazon, nice return there, 25%, and another stock that's probably benefited from social isolation.
Yes, it has. You'll notice that there's a bit of a theme here, sort of the big mega cap. But, here we are, 10, 11 years into this massive growth cycle, and now we've got this hiccup, but they're just in the right place at the right time. The retail business is doing, of course, extremely well. AWS, the cloud business of AWS totals almost 70% of the company's earnings before income taxes, and in conjunction with Microsoft, they're really going to own the cloud business for years and years to come. If there is some pressure when it comes to growth, they do have the option for margin expansion out there. But net, 2020 looks better on a top-line basis, a little lower on earnings and on free cash flow basis, but it's still in our top five. Currently trading around 23.35. We have a price target of 12-month price target of 2,650.
Okay. And then your final idea, Square. This one losing ground, down 7%.
Yeah. The competition here is with the likes of Shopify and Stripe, and watch out because they actually they report tonight. But Square is one of those merchant service aggregators. It provides management tools as well as financing to small and medium-sized companies. It has sort of two sources of revenue. Profits coming 60% from transaction fees, which has got close to 40% margin, gross profit margin in there, and then the rest of it is coming out of subscription and services, and that has like 80% plus gross margin fees. The COVID is going to have a bit of a negative impact on Square's business, obviously, but in the long term, the opportunity remains. It's they're fueled by innovation and execution, very strong management. So we still like them. Currently trading here at about just shy of $69 US. We have a price target of 79, 12-month price target.
Oh, okay. We got to take a break. Kim Bolton is our guest today. He's talking tech stocks. You can call us right now on Market Call 1-855-326-6266. Wendy in Edmonton is on the line. Go ahead, Wendy.
Hi, Andy. That was a nice touch. Friday, get to see your dogs, Roxy
Yes,
sister.
they're...
I wish I had dogs like them. Tim, I am one of the viewer that get your benefit of recommendation of Shopify. Thank you, Tim.
Oh, you're welcome. So that was Wendy. She wants to know about Shopify. Is that correct?
No, I'm sorry. Is Activision Blizzard was the question. I'm sorry. I think we got lost in the shuffle there.
Okay. Okay. Activision Blizzard. Andy, if you could, I just don't have my screens in front of me. I'm just trying to lower the bandwidth here. But we do, let's see, Activision Blizzard, they reported last night, yes, we own it. This is just one of those companies that is really one of the themes when it comes to this coronavirus and beyond, especially into digital entertainment and social networks. So we have a price target on this of $69.70 US. Last night they reported, and they just blew the socks off it. You know, bookings of 519 million beat the consensus of 340. It was really very much driven by that Call of Duty Modern Warfare. Sorry. And so it's just one of those themes in that esports and work from home and digitalization that is really making a heck of a lot of money. You know, there are a couple others in that field, but we've stuck with Activision Blizzard. Electronic Arts also reported last night, not as rosy as Activision Blizzard, and I think the other one that's coming up is Take-Two, but we like the Activision Blizzard.
Chris in Hamilton, Ontario, go ahead, please.
Good afternoon, gentlemen. Thank you for taking my call. I'd like Kim's view on American Tower. Do you hold it? I guess the other thing is it going to be a continual grower because of the advent of 5G? And what would a good price be to enter this stock? Thanks very much. Oh, the other thing is, what is the name of your fund again? And how do you go about getting particulars of it?
Oh, okay. Thank you. Was that Chris from Hamilton?
It was Chris, yeah. American Tower was the stock question, yeah.
Yeah. Thanks, Chris, for the question. I'll just sort of work back. How do you? The name of our fund is the BSD, stands for Black Swan Dexteritas. The BSD Global Tech Hedge Fund, a limited partnership. You can buy that through, we're on a number of investment platforms across Canada. So if you have an advisor, we're on some of the discount platforms. Or you can buy it directly and you can sort of lower the fees. So just go to our website, www.blackswandexteritas.com. Get the contact. You can actually and just say that I want some more information. We'll give you a shout. So American Tower. American Tower we have owned in the past, but you know it's a good story not only on the yield but also on the growth. But we just see some other more interesting opportunities. Certainly in the 5G. Where we see the opportunities are into the likes of Nokia and Ericsson and Cisco. American Tower are the ones that massive company around the world that sets up the infrastructure on the main cell towers around the world. The other one I'd suggest is also Equinix. They just reported again last night. They're one of the world's largest data centers, and so I'd recommend those ones versus American Tower. Thanks for your question, Chris.
Anne in Brighton, Ontario calling. Go ahead, Anne. I'm not hearing Anne. I think the question was Zoom Technologies.
Okay, Anne from Brighton, thank you very much for your question. We don't own it now. We actually owned it during March and April. Less of an investment, more of a trade when this all started, and we saw that the coronavirus was going to be an extreme issue. We picked up Zoom, and it just sort of skyrocketed, very much like their business has skyrocketed. However, there are some issues. Number one, there's some competition coming in. You know, you have Team coming from Microsoft, you have Meet coming from Google. You know, Zoom's daily active users were only 10 million back in December. And then by the end of April, they were 300 million. I use Zoom. But the problem is that, well, I actually use it, and you have to pay for it once you get, I think it's over 7 or 8, you actually have to pay for a subscription. But most of the users are non-paying users. And the whole idea is that they can actually monetize that into the future with some other sort of services as an add-on, also encouraging an advertising platform, but that is still extremely young. So fantastic company. A bit of issues during April because of the security side. That's all been resolved. But if we do actually see a bit of a pullback, we'll probably be back in.
Okay, we've got to take a break. Kim Bolton is taking your questions on technology stocks. 1-855-326-6266. Call early, call often. You can beat the rush. We don't always get to all our callers. 1-855-326-6266. Jason in Toronto, go ahead, please.
Hi there. Thanks for taking my call.
Pleasure.
I had a question about NVIDIA. I had bought some a few years ago and had been looking at possibly getting a little bit more, but I kind of missed the March downturn there. I was wondering if it's something you would recommend buying now, or if it's something you might wait on. Thank you.
Yep, thank you very much for your question. NVIDIA. It's really the darling when it comes to the artificial intelligence. And now they have Mellanox. So they've got very much into the quantum computing side of it. So they just reported, and everything looked very, very rosy. At the top end of our fair value estimate, we believe that it's probably on the top value as a price target of about $277 per share. But it's doing all of the right things. It has pristine financials to support its outlook. So we own a 1.5% position. I, like you, will look to buy it lower.
Okay. We have another, so look to buy it lower. Okay. Not screaming out in terms of value right now. Manjeet. Let's have another quick look at NVIDIA stock, because I think we might have had a mix-up on the chart a second ago. There's NVIDIA, the maker of specialized chips, which include graphics and optical applications. Yeah. We've got Manjeet calling from Mississauga, Ontario. Go ahead, Manjeet. I'm not sure if we lost Manjit there. The question was Shopify. Now, I know you've already touched on that, Kim, but I'm just curious, is there anything that would make you just walk away from Shopify and think, well, their run is over for now?
Thanks, Andy. Unfortunately, we don't own it. I saw it this morning. It actually went over 700 US, and that's got to put it over 1,000 Canadian. And that was on the back of its earnings that it came out, which was just a fantastic quarter. Earnings reported today, 19 cents versus expectation of 9 cents. Quarterly sales of 470 million versus expectations of 440. So that's what gave it a bump. Andy, I remember when I was on with your colleague Paul back on March 31st, I said that we owned it down at 420. I said if it went under 300, we'd buy some more, which we did. They came out actually early part of April, the CFO, and he said that they were taking away guidance, and so it actually had a bit of a swoon. We were able to collect it up at 360. But, we had a price target of 575, and it's never supposed to work that way. But within 2.5 weeks, we met price target, and we made 53.5%. But then we left some money on the table. And a fair bit of money on the table. It's just a fantastic story, but it also still has a long runway, especially when it goes more so into the international markets, but also into the fulfillment side, very much like what Amazon has done. So that's why people love it, and that they believe that they have a very lucrative runway. Right now, we think the price is a bit over its skis, but we will look to buy it back in the 400s. I know that sounds like a long way away, but I wouldn't be surprised if you see something.
Let's squeeze in one more caller. Gullum in Toronto. Go ahead, please.
Good afternoon, gentlemen. I'm trying to get some exposure into technology, and I was looking at SOXX or ZQQ. Would you buy any of those at this current price? Is this the right time to get in, or would you have another recommendation? I appreciate your advice. Thank you.
Thanks. We're tight for time here, Kim. Go ahead, please.
Yeah. Yes, we own the SOXX. That's the semiconductor ETF. We have about a quarter of our portfolio dedicated to semiconductor, software, internet, some robotics on the ETF side, but the rest of it is all single stocks. The reason we use the ETFs is because you can actually trade within that. But on the semiconductor side, we own Xilinx for the field programmable array semiconductor side, for Infineon servicing over into the automotive side. So we have some favorites on the semiconductor as single stocks, but we like the SOXX as a trading vehicle.
Let's take a break. We're going to get Kim Bolton's top picks in technology after this. Kim's first idea is ServiceNow. And just remind us what they do, Kim.
Yeah, ServiceNow, symbol is NOW. What they do is they developed a cloud computing platform to help companies manage their digital workflows for enterprise operations. Somewhat like a Shopify or Square, somewhat like it, but it's really become a darling out there, very much like Shopify. It was only founded back in 2003, and then it went IPO'd in 2012, and it's really strategically acquired over a dozen companies. and it's really become one of the greatest software as a service companies out there. Recently reaffirmed its position with its recent Q1 performance. But the reason we particularly like it is because 90% of their revenue is reoccurring, which is extremely high. So you don't have that much of a risk for its growth. Its current valuation is a bit pricey at 15 times forward revenues, but it's far above some of its other software peers in that sort of 30% growth bucket. So right now trading at about 377 US. Wouldn't recommend buying it here, but please keep it on your radar. I would look to buy it down at 325, and if you can get it under 300, it would be a gift.
Your next one, Facebook, FB.
Yeah. Recognizable names, however, certainly gave us an opportunity to buy into this more recently. And, you know, they surprised. They had their earnings a couple of weeks ago. Everyone expected to see like 10% plus year-over-year declines in their ad revenue, but they actually had a 2% revenue beat there. And they actually gave decent guidance going forward. They really are truly best of class on return of investment. So we see sort of a near-term floor. It's right now trading around 210 US. We see if you can get it under 200, it would be a gift. That's based on very conservative metrics around it. But we see the potential of actually this over the next couple of years getting up to about 300. That's if you can get this whole issue about the breakup done with. They just get probably levied with a fine. And then you can get back to that, 25 times multiple on their earnings per share. And you could easily see this stretch up to $300 in the next couple of years.
And then finally, a Pluralsight. What do they do?
Well, the other ones, ServiceNow and Facebook, a lot of the viewers would probably know it. But this is something that we've been following, and it's a very, very interesting company. So Pluralsight is an online education company that offers a variety of video training courses for software and developers and administrators, professionals, and so on. And about 70% of the Fortune 500 companies actually have Pluralsight enterprise license. And that accounts for about 86% of Pluralsight's billings. So they're an online education company. But doesn't that play very, very nicely into this whole work from home? And they did a very smart thing. They actually they came out and they gave a free April promotion. We really think this is going to drive a lot of business going into the second half of 2020 because it was very, very widely subscribed. Now, on the other side of the coin, they have had some problems. There was a slowdown in the revenue and billings. They attributed that to some issues over on their Salesforce side. And so they restructured their sales force mid of 2019, and we really believe, it's currently trading around $16, $17 US. Got a price target on this of $25.
So okay. Intriguing story, Kim. Just tell us briefly, how are you finding working from home or this new regime anyway?
Thanks, Andy. I've been sneaking down to the office, which is sort of nice because, yes, my office is downtown. They only let one person in, so if I get in there early, I can be the one person in the elevator early in the morning, and it works out. It works out pretty well. We're all set up remotely. I have an analyst here in Toronto. I have another one in Tel Aviv, another one down in Silicon Valley. A lot of our investors are spread around the world. So we're used to actually working remotely. We're all set up. And it just sort of breaks it up a little bit. I do appreciate coming on Market Call, but here sitting at home, I feel like I'm a bit on a deserted island, even though I know you're there down on Queen Street, and the viewers are across the world. So it's a little interesting doing these here.
Let's leave it there. Kim, we appreciate your coming on the show. Thank you very much indeed. Kim Bolton of Black Swan Dexteritas. Thanks very much for watching our show. Market Call will be back tomorrow.